Good morning and welcome to the Killik and Co market update. Markets have had a good run over the last few sessions and we're feeling happy to have some good market performance as well as some good weather. Here's a one-year chart for the S&P 500. You can see it's recovered from last month's dip and it's now back above that 5,200 level. Bizarrely, the reason for this strength in markets is some weak economic data. As we've talked about in a few recent videos, if economic data is weak, that means the Federal Reserve will be more likely to cut interest rates, and that in turn should be good news for equity markets. On Friday last week, the latest non-farm payrolls data was published. This shows the number of new jobs being created in the US economy, and the figure was quite a way below expectations. This is a three-year chart, and you can see that recent numbers have been way below the levels of 2021. And if you look at the last two data points, you can see that the April number was a fair bit lower than the March figure. Another slightly disappointing bit of data was continuing jobless claims. This is weekly data, and on here we have the last year's worth. Again, look at the last two data points, and you can see there's been a recent uptick in the number of jobless claims. The current consensus expectation is for US interest rates to come down in September. And here in the UK this week, we've had the latest interest rate decision and inflation report from the Bank of England. As expected, interest rates were left on hold at 5.25%, but 2 of the 9 members of the voting committee did vote to reduce rates, so we may not be too far from the first interest rate cut. Here's the Bank of England's chart of where interest rates have been since 2002, and you can see they've been at their current level since August 2023. The bank also published this chart showing the headline inflation rate, that's the white line, and also where that inflation has been coming from, shown by the coloured sections. Petrol and energy prices are shown by the orange, and you can see these were a real driver of inflation in 2022, but are now having a negative impact on inflation. Food inflation in the turquoise and other goods inflation in the purple have also declined recently. At the moment, most of our inflation is coming from the services sector, shown by the yellow, although even this has come down a little bit since last year. The bank still expects inflation to drop further this year, and in other good news for the UK economy, the latest GDP data was published this morning and it showed that the UK is now officially out of recession. And finally, Airbnb published results this week and the market was a bit disappointed by them, sending the shares down by nearly 7%. Here's the Airbnb chart since the company listed at the end of 2020. Like the broader market, the shares were weak in 2022 and they recovered well in 2023, but you can see they have dropped a bit recently. Here's the comment from the results that caused the drop. In Q2 2024, we expect adjusted EBITDA to be flat to up on a nominal basis, but down on an adjusted EBITDA margin basis relative to Q2 2023. In normal English, this means our overall profits will be about the same, but our profit margin will be lower. They then go on to give a reason for this. The margin compression is primarily driven by pressure from the timing of Easter, one-time payment processing incentive benefits impacting Q2 2023, and higher marketing expense partially due to timing. Airbnb's results have put a bit of a spotlight on the travel sector. This is a sector that has defied gravity since COVID. Despite the cost of living crisis, the willingness to spend on travel and experiences has remained relatively high, and some are questioning how long this will continue for. This chart shows the performance of a travel sector ETF since 2021. It contains hotels, airlines, travel agents, and cruise companies. The pattern is very similar to Airbnb's, with a bit of a dip at the end, so we'll be keeping a very close eye on the travel sector. Moving on to have a look at next week, it's a big one for the telecom sector, with results due out from Vodafone, BT and Deutsche Telekom. That's it from us. Have a great weekend, and we'll see you next Friday.